Folks, I hope you're doing well. I'm recording this video on April 24th, 2022. And if you're in Central PA, you'd have realized that this is the best weather we've had so far. We've been expecting great weather and we've had turbulent. The forecast would change every 2 hours, it seems like. And we get a good dose of spring and then smacked hit with another shot of winter. It's turbulent here in the seasons in Central PA. And the same can be described for our real estate market. And what I mean by that, and we're going to go over some stats, but in short, this market is changing, and it is changing for a number of different reasons, and it's being felt by some, not by others yet, but it's never been more important to understand where you are in this market and how you can make the most of it. There's two primary causes for these changes: inflation as a whole and interest rates on a 30-year fixed mortgage. So if you see, this chart shows just over a year ago, May 2021, we were just under 3, hovering around 3% with the average interest rate on a 30-year fixed rate. Now it's 5.11. Here just 1 year ago. And look how quickly this spike began to happen starting in January, February, and it went up. And we anticipate that to continue to go up. What does that mean? That means it's costing buyers more to go ahead and borrow money. That means the dollar that they stretched in a monthly payment isn't going to get them as much home. If you're a seller in this case, what does that mean? Well, some buyers are going to have to drop out, lowering demand just a bit. And you can expect your price increases not to be nearly as fast as they were just, say, 6 months ago. But the odd part is when I say the market as a whole is different by price point, by location, when you look at the overall stats here, you'll see that the average median price a year over went over from $394 to $468. So prices are still seem to be popping up. There's little signs of increases. We had 18 days on market in March, 26 in February. That's probably winter adjusted for an average of 20 days on market. But that continues to creep up just a bit. And the average inventory continues to creep up just a bit. You know, we're just under a month last April. Last month, we're over a month. Those are the beginning signs of overall market changes. If you're a high-priced home, if you're over 600 in Central PA, you're feeling that a little bit more. The interest rates on loans, on higher loans, obviously have a larger impact. If you're in the first-time home market, if your house is anywhere between 150 to 240, 250 in that scenario, I can tell you you're not feeling as much of it because there's still a huge fundamental driver behind all this, which is simply supply and demand. We have way more people in that market than there are homes available. The new build market continues to have their price increases and their delivery times are still questioning. So the inventory pressure overall that the builders are promising to deliver, still going to take some time for that to happen. So what does that mean to you? Great question. All I can tell you is that you've never in this kind of situation needed professional advice more so in this market than you do now. So if you would like for me to help you with that advice or for me to share someone that would be awesome to help advise you, please reach out. I hope you have a great one.